The small scale multi unit housing initiative, otherwise known as Bill 44 or Multiplex, has created potential new wealth for most people that own a home. In many cases, we're talking about 7-digit wealth, though very few understand the path to unlock that wealth. That is why we have David Babakaiff from Alair Homes with us today to walk through exactly how homeowners can access the wealth in their homes, the process to get there, and the team that he has built to help you realize this. David, it's great to have you here with us today. Can you please introduce yourself and share a bit of your history and path that brought you to where you are today?
Thanks, Dan. Yeah, I'm excited to have this conversation. Let's see, over 25 years ago, I project managed our first 2-family homes, and that was my introduction to building. Over the last almost 3 decades, I've built small multifamily properties, been the lead builder in the large subdivisions. I've built over 200 homes and launched Alair Homes in the Vancouver area. Alair Homes now has over 100 locations in North America. I remember when I built those first 2-family homes for myself, my wife, and kids. My wife and I designed the house, and I coordinated the trades myself. That's when I experienced that I can personally add equity and wealth at the completion of a house. But really, that's nothing compared to what Bill 44 created. The early days as a builder, had its challenges for sure, and lessons to grow. I was lucky that I got, most of the project right and had to adopt quickly on the other sort of 20%. As I realized I made some wrong hires or didn't know, even if I had the construction mortgage at the full amount, there could be a mismatch between what the bank's drawdown was. But anyway, fast forward to today, where I recently won the 2024 Best Multiplex Unit Award from the Home Builders Association in Vancouver. And that award was for a custom duplex just before Bill 44 was introduced. And that's when I began to realize the incredible wealth building opportunity for multiplex, and that created for many homeowners. So I'm looking forward to a deep dive into it.
Well, right on, David. Well, let's get into Bill 44 for a bit here. So how has Bill 44 shifted your outlook on the housing landscape? And maybe tell us a bit about your personal motivations for homeowners, or what personal motivation for homeowners might exist.
Well, to be honest, Ryan, it took me a minute to process what Bill 44 full impact of had on homeowners and on value in the properties. But I found myself going through a process where my mindset started to shift from being a home builder to really somebody that's positioned well to help unlock wealth for homeowners. And that's really been a mind shift from thinking like a builder or an investor, to kind of that light bulb moment. Since, over the last half a year, helping families, just that feeling of helping families gain new wealth through multiplex construction, it's become my passion. I think it's important to me, Ryan, probably because all my career, I've been building businesses and in construction, and a lot of my drive has been to create security and protection and all that for my family. So that's been core to the way I work. So when this has been created, I'm going, wow, what a leverage for, not only us, but so many homeowners. And I just find that I'm well positioned to understand what's going on, and I'm just compelled to share that story. So thanks for having me here.
Absolutely. So, Bill 44 has revolutionized the housing landscape in Vancouver. And it's encouraging and allowing homeowners to basically reimagine the property that they currently have as a multiplex. And this legislative change presents an arguably quite a lucrative opportunity to own a new 2 or 3 bedroom unit in a multiplex on their own property in the neighborhood they love, be mortgage free, and put a lot more cash in their pocket. Maybe let's touch on, first of all, how many properties this has affected and how this is going to work for people.
This affects almost 300,000 properties in the Lower Mainland. It's essentially just about anyone with a house. There's few exceptions, of course, but it's the most of them. So anyone really thinking of multi-generational living or how they might be able to profit from this change is really who we're talking to. Just think of it this way. Anyone, like when you have a house right now, everybody knows what their house is worth. But just imagine for a minute what it would be worth if there was a fourplex or a sixplex on that property. It would be a lot more. So the question sort of becomes, how do you make that happen? How do you stay safe and control the risks? And how do you put that arbitrage or that profit that's potentially sitting there in your own pocket? And that's what we realized over a period of time working with this on how to do that. And we've been building, and like I say, won that Multiplex award. So we understand the costs and the things involved. And it's not to be, it's not like most homeowners we talk to go, hey, I like the idea. I've been thinking about it, but I'm not sure. I'm kind of scared about it. Like we don't even know if we can afford the mortgage. What if things go wrong? Like all these legitimate questions, right? But it's not that they're without answers. There's almost, last time I checked, 288 permits, applied for, and they're over 90% of them are from developers, and for good reason. There's profit in it, and it's controllable. So it's just we've just been able to develop a way to bring that level of sort of institutional quality pro formas and construction and make it available in a simple way to homeowners to understand.
It's unquestionably the biggest question that we get from homeowners, right? With this, they're looking at their property and they sort of understand what multiplex is, and they want to know what type of profit are we actually looking at, right? So for homeowners that are interested in converting their single family home into a multiplex building, what size of returns are you seeing in this marketplace?
Surprising size of returns, actually, Dan. The returns on we've ran almost 24 pro formas on properties from the east side to the west side now, and the range is, so far, it's between just over $1 million and $2 million pre-tax. So imagine having a home, whatever that's worth, and then going through this, still having a unit. Most people want to live where they still live, right? They don't want to move somewhere else. So they keep a nice unit for themselves, sell the rest, and their unit is free and clear. They don't have a mortgage. And that cash I just mentioned is literally liquid cash in their pockets that they can reinvest or spend on whatever's important in their lives. But it's truly amazing.
One of the first questions I believe a homeowner will have is, what can I do with the 6 units on my lot once they're completed? Do I sell all of them? I mean, obviously we talked about maybe staying in one of them. Can we move some family in? Do we rent them? How do you answer this with homeowners?
The best answer is it depends on what the needs and goals of that homeowner, of that person asking is. So for instance, some people want to do multi-generational living, to bring the kids and the grandkids in, or vice versa, to bring mom or dad to live with them, right? But not necessarily in the same unit. So they'll have a different driver. They'll want to keep a couple of units, for instance, and the other 2 units they could rent, they could sell. It's really up to them. What our role is to just provide the solid advice so that they can make a decision that's good for their family. But they have everything available, from selling them all to keeping one, selling the rest of them, renting them. Renting them doesn't seem, as when you run the numbers, isn't quite as attractive as selling them, just because of the high cost of land and building. The rents wouldn't really cover that if you held it in a mortgage. So most people so far are just looking at selling the other units.
So it sounds like really you're creating a bunch of options and opportunities for that homeowner. And that's really good because, in their mindset, they're going to have unique situations and scenarios across the board. Like you said, from selling all to maybe even keeping all and having a nice little commune for the family, right? And anything in between there. And that's kind of how the homeowner is going to approach multiplex. But what about developers? How are developers looking at multiplex in comparison to a homeowner?
Well, developers, whether they're private developers or running a limited partnership fund, they're obviously looking at it to make a profit. So they're, in my opinion, at somewhat of a disadvantage in a way to the homeowner, because they have to buy the lot at today's prices. The homeowners we're talking about bought the lot maybe 15 years ago or something, right? So now they have this large, they're rich in property, large equity, regular income. So they're the ones that they don't have to buy it at that. So their return is easier to achieve, I think, and higher, because they've got that equity, and they can utilize it without putting any more cash in. They can utilize it to execute on a multiplex and gain the new wealth we're talking about. And it's good to remember this wealth wasn't there a year ago. Like this was all created with, as an outcome of Bill 44. And even to me, it wasn't obvious for the first few months till I kind of start working through it and how do you make this available to homeowners and not just developers. But to answer your question more directly, Dan, it's developers look at it from a profit. So they run the risk analysis, future sales, exit strategy, like how they're going to do it. And then the deal structure, whether they're just buying the land or if they're partnering with a homeowner that wants to roll, maybe has a mortgage on their property that wants to roll the remaining equity into the deal if a developer wants to do that. That's how they're approaching it. And
if we're to shift sort of gears here and look at it from Dan and I have kind of coined this term as a civilian developer, where the multiplex program has kind of allowed the homeowner themselves to look at what their own options might be as well. So for those who have been watching the multiplex space now for a few months and they're sort of exploring their options, as a homeowner, what options do they have to go from a single family home to a multiplex?
Well, they really have three options, Ryan, I think. So one is a DIY, the other one's working with a developer, and the third one would be what we're talking about today. So let me just spend a minute on each of those. The DIY is do it yourself, of course. They would need to be somebody that's been around construction, I would say, that has some familiarity with it, because they have to work with a builder that has a license, obviously, and put all the pieces and parts together, including the financing and the deal structure, the exit strategies, and also know how to analyze the risk, because a fourplex or sixplex is more complicated and a serious type of construction compared to a custom home. So, but that's certainly available for those few that feel like they want to take that up. I think the other one is really just they're going, hey, I don't want to deal with all this stuff. I just want to sell the property, and I take my equity out and go do whatever they're going to do with that. Or they may partner with a developer where they take, let's say that their property is worth $2 million. They might have a $900,000 of mortgage, so they're going to take $1.1 million, and that becomes their equity stake as a limited partner inside a LPGP fund with a developer. Some developers are willing to do that, and then the owner would get the returns alongside all the other limited partners, but they transfer their property to the developer in order to do that, right? They don't own the property anymore. And then usually they'll have if they want to still live there, they'll have a preferred purchase of one of the units to move back in. So that's a good solution for folks that do have a significant mortgage on their property, where they can use that extra equity and still do this. And then the third option is what we're talking about today, which is we've created an ecosystem of all the experts that a developer would have on staff in place, for instance, and then so a homeowner could really just plug and play and still get that same institutional level support work and all of that, but they get to keep their home and they get to keep all the profit. So that would be the third option of how they do it.
Certainly sounds enticing. I could see why people would want to reach out about this. And let's kind of go a little bit further into viability. And what I mean by that is you've identified that about 300,000 odd lots across BC have been rezoned and can have multiplex built on them. But there are some cities that have certain bylaws that don't allow for multiplex. So what's the process involved to basically discover which lots are viable and which ones aren't? And what's the best way for a homeowner to reach out to you to find out if their property qualifies?
Yeah, so the best way really is you need to run a feasibility first, and then that sort of financial performance. So the feasibility is just like it sounds. There's lots of reasons why, even though a property might be zoned correctly R11 in Vancouver or the other zoning designations in other municipalities, there is a number of reasons why they wouldn't still be qualified. So you got to run all that feasibility, or have somebody run it. The cities do provide some guidelines on their websites for homeowners to follow if they want to do that, like some preliminary investigation. But otherwise, yeah, feel free to reach out to me. Probably the easiest is just at my email, david@alairhomes.com.
Perfect. And we'll certainly include that contact information within the comments below too. Let's get a little bit more expanded on the financing element. Like, how much does a homeowner have to invest in cash into this type of project with you?
What we're seeing from the performance, Dan, is the answer is actually zero. The reason is, imagine this, this is where the high cost of land, of property in the Lower Mainland works in the favor of this multiplex program, because in order to get the funds to build the project, do all the design work, prepare the lot, and build the new multiplex, all of that cost relative to the cost of the land makes the whole project come in under 60% loan to value, LTV. What that does is it allows us to be able to go to the mortgage market and obtain construction mortgage specifically for multiplex within that 60% LTV, and it covers all of the costs involved. So the homeowner, aside from some sundry costs like having an appraisal of the land done or something like that, there's no real material cost involved, because it's covered by the money that we can get from the mortgage relative to the equity in the property. There's a caveat there, right? That makes this works where the homeowner has lots of equity or no mortgage or lots of equity. If there's a significant mortgage on the property, then the LTV will be too high and this program won't work.
Got it. Well, that certainly makes it even more enticing, and you're right. Vancouver's kind of one of these unique areas where we've seen such immense appreciation in properties that a lot of homeowners, free and clear, do have a lot of, options on the exit.
So with this, this is such a compelling idea that we've had a number of lenders, not mortgage brokers, but lenders talking to us about structuring a specific mortgage for this product. Now, interestingly, my first conversations were with the standard banks. I won't name names, but they're all, I've had the conversations where they actually advertise a multiplex mortgage, construction mortgage. So I'm saying, well, that's awesome. So I call them, and they go, when we get talking, and they go, well, we'll give you we'll give your clients a construction mortgage if they qualify for that size of mortgage and pass the stress test, and they're going to have a long-term 25-year amortization mortgage with us in the end. But if they're going to pay their mortgage off and be mortgage-free, we don't have a product for them, because we actually make our money on that long-term mortgage. So we don't have just a construction mortgage only without it being attached to a long-term mortgage. And I thought that was really interesting. And the other caveat is that they need to, for the multiplex mortgage, they also need to retain all the units and rent them. They can't sell them. So I thought, well, that's useful, not very. So what that does is leaves us in an alternate lender category. So we've been able to structure a multiplex construction mortgage that's specifically designed for this product and this need, where it matches properly to the needs of the construction costs as they go. And it's interest only, and there's no penalty, paid off anytime. Faster the better. So it works perfectly for this product. It just removes another hurdle, because there's a number of, and we should talk about that after, but there's a number of things that need to get done specifically, right, where this thing flows really well. And that's one of them is the mortgage. So we've been able to get that mortgage structured. It's a program. So far, I've been calling it multiplex construction mortgage, which is a terrible name, really, right? So maybe if it's okay with you guys, let's do a bit of a contest and put it out to listeners. They can put it into the comments below, going, what is a better name? Like, this is something important that unlocks all this wealth. We should come up with some snazzy name for it. So let's invite those invite those ideas. Let's say till the 20th of December. We'll compile it. We'll give it to the mortgage lender. They'll make a choice which one they like the best, and whoever the winner is, we'll do that. We'll do a feasibility and a financial pro forma for free on their property, or if they want it for a family member, somebody we'll do one for free for them, whoever that winner is.
Oh, that's amazing. So here we are, 4 years into this podcast, and our first contest has just surfaced. So please, it's a really nice offering. Thank you so much, David. If you have an idea for the name of this mortgage, put it in the comments below. Would be great. And we'll follow them all. And there you go, free feasibility study on your home. And I guess that leads me into the next question here, because of course, Bill 44 it's relatively new, right? We're barely 6 months in on this passing and becoming enacted. And so there's a lot to understand, right? When it comes to things like residual land value and truly identifying the upside potential in a home and configurations of units and what style of home is going to best sell for the best price in that exact neighborhood on that exact block and so forth. And this ultimately means that working with a team of people that are professionals and intimately understand the changes and how they affect a home's value is extremely important, right? You can overbuild, you can underbuild. There's all sorts of potential landmines to avoid. What is your advice to homeowners in that regard of working with a team of absolute professionals and specialists in Bill 44?
Well, it's the team, because there's half a dozen or more key players that need to be at that table for the homeowner down. So that includes for instance, the general contractor and the architects and engineers and that kind of thing. But that's also the financial performance team that can run the numbers for them. Like you don't want to do this off the back of a napkin or go, hey, we'll make some money, we should go invest a couple $1 million. Like it needs to be done, professionally, and you need to have the right team that understands how to run. And the performa that we run is 57 pages of integrated Excel sheets. It's kind of complicated to look at, but so you have that team there. There's also, let me just go down the list to give the viewers an idea of who those team members should be. So one of them is really is actually the realtor that's at the table. It's sort of like not all builders know how to do multiplexes, and not all realtors, understand multiplex very well or know the answers for that. So, for instance, like recently we were just working with one of our clients, and the realtor is at the conversation early in the stage, and we're, that in this particular case, the client can do a fourplex. Like the math goes, well, do net zero, max the size, we can do a fourplex, maximize the return. And that creates a 3-bedroom for the owner, and a couple of 2 or 3 2-bedrooms and a bit for the ones for sale. The realtor during the early stage discussion goes, well, in this particular neighborhood, which is an upscale neighborhood, the buyers are going to actually be downsizers from the neighborhood that want to stay in the neighborhood. They just don't want the big house and all that looking after it anymore, but they want a level entry. So that's who one of your buyers, and the other buyer is going to be a family with kids that are upscale and want to stay there as well. So they can afford the higher price, but we need the bigger 3-bedroom units for each of them as well, not the smaller ones. So we adjusted the design of it to 3-unit with larger units to accommodate that. It's still the same square footage, and when you run the comparables, it actually sells for more money per square foot as well. So that's an example of having the right kind of expert at the right spot. So that's an exit strategy. What is the exit strategy, and who's part of that expert team that's figuring that out? Well, usually, or that's one of the team members, is somebody who understands that market and who the end buyers are, of course. So the other one is really, we already touched on it, the mortgage. You got to be able to finance it. And when you sell these units, it's actually a taxable event. So of course we want to minimize the amount of tax. So part of the experts that need to be at the table, that we have at the table, is like a CPA that's expert in in minimizing tax on the on the sale of assets. So how do you do that? There's usually 4 different ways to do it. So we bring that in early so that people can get organized and understand what the options are and structure it to really minimize their tax on the units they're selling. And there's even things you don't think about initially, like one of our clients said, well, where am I going to live while this is going on? Well, good question. Like, some people that's cool for, but otherwise, that's another group, is just having the rental agency at the, as part of that team that can provide that sort of seamless experience, so that from front to back, from thinking about it all the way to where you're living and how you're moving back, all of those items are thought about, and there's an option, for a good experience all the way through. So I know that was a longer answer than you probably expected, but there's all of those are
David,
important.
you make some really good points. A lot of our audience knows, I spent almost a decade in construction prior to becoming a real estate agent and starting this with Dan. And I can tell you the importance of having your respective professionals in their own lanes and how that applies to something like this, especially when you're talking about, multi-million-dollar outcomes here. And those shouldn't be messed with. You need to trust the professional. There's one thing, to do it all on a spreadsheet. It's another to actually execute it in the field. That's a whole nother element to it. So anyhow, with that being said, seeing as some of these homeowners, if they elect to go down this route, may be looking at a 7-figure increase in value, there's obviously going to be some major tax implications. And you kind of touched on it just before, but how do we navigate these tax issues?
It's influenced quite a bit by the way that homeowners already set up with their life, with their businesses, with their assets, with their estate planning. Have they done any of that yet or not? Is it complicated already? So they need somebody at their on their team, and where they can unravel all that, understand it, and then go, well, therefore, it's either should be a capital gains of that, depending on some key structures, or it all rolls into a corporation, and then you pay, and depending on how you do your year ends, you might be able to do the minimum 11% corporate tax gain, and then even have a loan back from the company, so you get that money back tax without paying tax on it again later. So there's really smart strategies that are all available, but which one you take depends on the rest of your sort of life and business and investment portfolio and how things are set up. So to answer your question, Ryan, is what they need to do is, if they already have a financial planner, CPA in their life that's looking after these things, they'll be able to manage that answer for them. If they don't, I know that the ecosystem of those team members that we put together, we have a CPA expert in that's optional, but it's available. Initial consultations are free and everything, where it really helps them, because that's a question that needs to be answered early on to understand what that implication is and what the net income, because that's what we're all interested in, is what is a net profit. And what we're seeing, it still stays in that 7-digit area.
Yeah, so you're really stressing on how important the comprehensive team is, and especially out of the gate, because these are the type of decisions and understandings that need to be understood, again, earlier on, I think, to help benefit that homeowner. And another thing that you touched on, but I certainly want to hear more about this, because homeowners definitely recognize that, hey, if I'm building multiplex, my existing home is being torn down. So do I have to go out into Vancouver's challenging rental market and find somewhere to stay? Like I can't afford a hotel for a year or 18 months. Like, it sounds like Alair has already addressed this. So can you expand a bit on what you offer the homeowner for temporary housing while that multiplex is being built?
These are all good points, right? And when you add them all up, imagine a homeowner starting to think about this and then going, well, what about this and what about that? And then all of a sudden it feels overwhelming and complicated. So that's why this sort of team is really important, where you have all these aspects covered, right? So to be clear, Alair is the general contractor. Alair Homes builds the product, and the rest of the team members are really just cooperative, but committed to this project, right? So on the rental side, down there, we have an agency owner that's agreed to participate with us that currently manages over 14,000 properties in the Lower Mainland. So if somebody is going, well, where are we going to live? We'll make that introduction. They'll find the spot, whatever is most comfortable for them, whether they want to live in Whistler or in a condo or in another house in the neighborhood. We'll be able to probably help them with that, as well as arranging the movers and where does stuff go, storage while we're waiting, like all of those things. So if they want that help, it's there.
Interesting. And so, David, there's when we talk about the multiplex, there's definitely people who have maybe lived in some of these neighborhoods for 40 years, and they certainly don't want maybe a condo tower or a small condominium going up beside their single family home. And I do know through, the city of Vancouver, they're looking at pre-approved designs and things like that. But how does Alair Homes ensure that the final product will look good and that it, because if I'm going to redevelop my home in the neighborhood where I know all of my neighbors and none of them want that, you want to make sure, at least if you're going to do this, that it's going to look good. So how much input does the actual homeowner have when it comes to this?
Yeah, there's two parts to that answer. So I found over the years that it is best to stay in expert lanes. So even for myself, we've over the years won our fair share, or I've won my fair share of gold trophies for, best design and all this kind of stuff. But when there's, truly dedicated designer and architect at the table, it's always better. So we start there, right? Going, what do the bylaws and all this kind of stuff allow? And then what's the mark? Because we're building it to make, most people are going to want to live there. They want it to be attractive for themselves, but they also want it to be the right kind of looking product for the market. Because there's really good evidence of, you can build the same size building. One kind of looks like a cheap apartment. The other one looks amazing. The one that looks amazing sells fast for like, $500,000 more than the other building, but they're both the same size. So your question's a really good one. So we approach it that way, going between the architect, ourselves, the realtor, have that preliminary design. But then with Alair, we have what we've copyrighted or trademarked as client control construction management, which just means that not only is there full disclosure to all the costs and all the things that go on, but also the design, right? So as it's developed, there's collaboration with the owner, of course, because it's still their property. Most people are going to still live there. It's going to be their home. So obviously input into their own unit, but the whole building too, right? So at each of those key design moments, the homeowners are at the table discussing, providing their input. And at the end of the day, they need to literally, press the green button that says, I approve that design. I'm stoked. Let's go. So until we get there, we can't go forward.
Great answer. And it makes a lot of sense. And keeping in line with expert lanes, multiplex, again, being somewhat of a new concept here, how does a homeowner, I guess, choose the right builder? How do they know they've got a history in multiplex, which has only been around for a semi-short time?
A question that's maybe before its time, because this is so new. So what's happening is, in this market, like, we're not really building them yet because we're waiting for the permits to get issued. So even though ad hoc, there's been the duplex and the townhouse and these kind of things before, but not really this. Yeah, and a few locations where the rezoning has happened to allow a multiplex, but not under this, Bill 44 program. So what's happening in the marketplace is that there's lots of multifamily developers that are moving into the multiplex space because it's reducing risk and quickening the turnover for them. And there's also lots of builders that are adding or converting from custom home building or spec building in homes to multiplex. So how do you know which one, like, how do you choose between those, right? Is a great question. I think for a homeowner, the real practical way is sort of about pedigree. Like, when you just take a look at what have they built, what have they done, have they won awards for it? Do the stuff they do look good or not? Do they have a good reputation or not? And if you talk to them, if you're talking to a multiplex builder, do they make sense? Do you understand what they're saying? Are they more like, if you're going to do this, you need all that ecosystem of those different experts at the table, right? So the builder might be a great builder, but not necessarily understand the other things we were just talking about a few minutes ago. So you need to be able to fill those gaps or find somebody that knows all those things.
Yeah, that's perfect. Appreciate that. Well, this has been incredibly insightful. And I know there's going to be a lot of viewers who are homeowners who are going to want to learn more. I mean, when's the last time they were offered potentially $1 million more on the sale price of their property? So we've got your contact information, and we'll certainly, again, be including that in the comments below, and we'll guide all these people towards you for more questions. But thank you again so much for being on here today. And we look forward to exploring multiplex further. I'm sure we should do a follow-up interview in 6 months to a year and see how many are under construction that you guys have and the types of profits that are being realized. So thanks again, David, for being here. And thank you as always for tuning in. We will see you here next week.